Hi, Warriors. How's everyone doing? Of course, things escalated in the Middle East. S&P is like a beach ball. Dollar is responding. Um, Plenty left to squeeze, I think. Good morning. How are you? Good day, Alexander, Mike. Ryan says take care this week, so take heed to what he's saying. K-Man, good morning. AJ, James, and you too, whoever you are. Bran, Hugo, hi Blake, Will, how are you? Ingmar, Bran, okay, and Katsub. Whoops, didn't mean to do that. Anyway, okay. I want to talk about something that we have here at Forex Analytics that I think could help, especially people that are fairly new to trading. Let's hope I don't get rid of this. Okay, so here you go. Now you hear everyone talking about levels. All the pros here at Forex Analytics talk levels. So when you're fairly new, you might be able to recognize support resistance levels, and if you can't, you have them all here. Okay, and you can draw horizontal lines on your chart at these major levels, especially bull bear lines. Okay, or when the trend might change from bullish to bearish. So that's a great thing to do. What a step better is as a member you get the bias chart, which really nails down the real important levels. So something to keep an eye on if you're beginning to trade. It will teach you to start looking left instead of always looking right to where the market is might go. Knowing where the market has been. That's the market's memory. Everyone with me on that? Okay,
Yes,
let's
sir.
get.
Thanks, Coach. And good
All
morning.
right. Good morning, buddy. So let's get to the dollar is really they're squeezing the shorts here. Um, Euro is going to look pretty ugly under this. You could have like a descending triangle. It's a little over 150, almost 200 pips from here. That could take you minimum down to this moving average. Dixie stopped right at a moving average here. I still think there's a chance for 100, maybe 101. We'll see, especially if things accelerate.
Hey,
And
hey, hey, Dale, I know you're talking about the dollar, but let me ask you, what are your thoughts about what has happened over the weekend? I mean, and where do you think it goes from here? Like, obviously, we've all witnessed,
yeah,
the bunker busters, and I
yeah.
mean, do you think the situation accelerate? I mean, the dollar obviously is looking stronger, and it looks poised to continue to rally, especially if, things precipitously get worse. But what are you thinking here, regarding, Iran, and is there going to be a retaliation? And so
Oh,
I just thought I'd ask you.
well, first of all, Israel is not, Israel has allies, but don't forget that Iran has allies.
Right.
And China gets 80% of its oil uh, from Iran, and they may be sending them if they have shortages of missiles or launchers. Why wouldn't they help them? So we move to a different stage from the proxies being Hamas and Hezbollah to the proxy for China is
Yeah.
Iran. You just go
Y-
up another, and I just one more thing. I had a
Yeah.
flashback when I watched the president on Saturday night of President Bush landing on the aircraft carrier with banners saying mission accomplished. So that should tell you what I think. It sounded like a mission accomplished speech to me, and I don't think that's really the event. I think that there's going to be Uh, we're in it now.
Yeah, I mean, China,
We're in it.
China, their envoy guy, whoever that person was, I don't know. He was like, he strongly condemns this move by the U.S. I mean, this is
No,
more of
that's
a,
just talk. That's just talk. I mean, they don't have to announce that they're sending missiles
of
to Iran,
course,
right? I mean,
yeah,
they all help each other. North Korea sends troops to Russia. It's the cooperation between, um, Russia and China, I guess, have two proxies, right? They have Iran and North Korea. Or
yeah.
maybe China has Russia as a proxy too. I'm not sure. They're at times allies, at times adversarial. But don't forget, just because Israel has an ally, mainly us, and Iran has allies too. So I think this is just the beginning of what's going to happen, and there'll be more instability and probably more conflict. And the best case
And
is, go ahead.
no, I was
No,
just saying, and that's actually reflective a little bit in the dollar that you're seeing here.
yeah, uh,
Basically, I was just going to say that.
yeah. Okay, so anyway, it's prone to pullbacks, but I would say look at where we were last week and where we are, and we put in a decent week prior. Canada's been really huge. We talked about it down here.
Yeah.
I'm sure it's negated that downtrend line,
Oh, it
uptrend
has.
line. Yeah.
Yeah.
Um, okay, so that's kind of the way I see things, and the S&P's Pavlovian response. It worked. We'll see. The 6,000 level looks big, but here we made another trip near 5920. I don't know how many 5920 trips this can handle. Now you even have confluence with the moving average coming in at that level. So, under 5920 opens up the door for, 57-ish.
You
So,
know what's I want to say it was probably the most interesting move, and I know Ryan and K-Man are going to have something to say about this. Is the yen, because
yeah,
I actually bought yen last night. I sold dollar yen at like 140 pre-market. Actually, it was 146. It's just as the market opened,
yeah,
146.65 I think is where my entry was. I got stopped out above 147 last night. I got up and I was like, what the hell? But it's been a really interesting move, and we were just having this chat in the chat room with K-Man and myself were just discussing, and these guys are gonna have a lot to say about it. One of the things about the yen has been, remember, the commitment of traders positioning has shown the most yen buying in history by leveraged funds in history. I'll pull up the chart when I
okay,
take over the charts a little bit later in history. So I was just saying to K-Man, and guys, if you're not having these conversations in the chat room, we have this all the time. This is not just a conversation I'm having with you guys, and that was it. That's the only thing we talked about in 24 hours. No, these are conversations that we have with other traders every day. So if you're not having these types of conversations with people, you should be in a community like ours where we do. Because I got up this morning, I'm like, shit, what happened? And we're talking about it, and Bubble Boy was talking about, maybe, Japan and what they're allocating towards BOJ purchases and whatnot, or excuse me, and towards JGB purchases. And I think it's a positioning squeeze. You when you have all these people that are long yen, and the worst situation could have happened in the world this weekend. US bombs Iran. I don't know what gets any worse than that. No, maybe we can go after China, but you get what I'm saying. It's like a most extreme situation, and the yen didn't strengthen. Now you got
yeah,
all of those guys getting crushed, and they just all got
yeah,
stopped out. I got stopped out, but all the big leverage funds that have hundreds of millions of dollars in yen longs, they just all got stopped out overnight. I think that is one of the biggest positioning moves that we've seen in a long time. I'd like to open that up to discussion with you and K-Man and Ryan, because is my opinion of the biggest thing that's happened overnight. So
And it's commensurate with the S&Ps coming in sharply lower and recovering too, because the U.S. dollar yen going up is used to be risk on, and maybe it still is. Seeing nothing in the 10-year to reflect it, it's going in the opposite direction. That correlation, forget it for a while. It's just disconnected. So while we talk about the disconnection of correlations and what Ryan is his intuition is saying about taking care, telling traders to tread lightly. Good morning, Ryan. What's behind your caution this week? Where do you think the landmines are?
Landmines everywhere. Got to have,
Okay,
got to have
yeah,
your steel boots on. Yeah, I mean, it was a bit of a shock to see how the yen reacted when it started off looking well. Apart from dollar yen, euro yen opened down.
yeah,
That looked like it was following the way it should go. Gold was up, and then we just got a reversal of both, and here we are in dollar yen shooting up. I'm gonna take a slightly different line to Blake on his leverage positions, whatever. I don't think anyone's getting crushed here, apart from short termers, because if you look at the wider chart, they've been right all year. The trend has been down all year until this last few weeks. That's not to say short termers aren't getting taken to the cleaners and everyone jumping in thinking, oh, got to short every dollar yen rally. But even just look at the last couple of weeks. We've been talking about it. The dollar has turned. It's not. Yes, it's still maybe the weakest link, but we're not seeing it go any lower. The switch out of US assets and whatever still is
yeah,
ongoing, but we're not seeing huge moves south in the dollar. You point out there, you got almost a double, triple bottom down in near your
yeah.
low 97s. So the mood has shifted slightly. Also, what happened at the Bank of Japan and the Ministry of Finance with their bond tinkering, that shifted things, made it look like they're not any closer to a hike. And also, one thing they use an excuse is uncertainty. So Israel, Iran, and the US all kicking off is just more uncertainty. So my reason for caution today is that I'm not seeing stuff move the way it should move on this type of situation. And when I don't understand something, I don't want to trade it. I
Okay.
mean, I was long Aussie dollar. I just got out this morning, pretty much right here. I added a bit at 64 just to trade off the big figure. We broke that. I'm like, no, I'm done. I don't want to know. Because last week we're trading reasonable levels, we're trading within ranges, we're respecting levels, and then today we're not. So I'm not interested. Other people can go and catch knives and pick tops and bottoms. I'm going to let things settle down and protect my account.
What's your next big level in Aussie? Because there are fibs underneath it. We have a fib here at around 63, and
Yeah.
then halfway back it's 230.
63, 55, 60, which is just that series of lows
Yeah,
you've got going through across May.
right here.
Yeah, right in there and back a bit. So, yeah, 63, 55, 60 is the next level. But, yeah, if it keeps going, well, it could go down to 62s if this mood continues, because this is nothing to do with technicals. You get a headline that Iran, attacks US on US soil, some terrorist activity. Well,
Yeah,
that doesn't markets don't care for coloured lines on a chart in that situation.
yeah. And the S&Ps, a lot of people think that it's overdue to correct. That's huge recovery.
Yeah,
So maybe this event is coming in, or the next, or the retaliation that could, take it down to, there's a gap here. I don't think we're going to get to the gap down here, maybe, but you would think that there'd be at least some kind of pullback in here. But really, it's such a beach ball.
it's a
And,
bit of complacency, don't you think? It's complacency that okay, this is the US. They're the big, the big daddy. What can
that's
Iran
right.
do to them?
Yeah,
And
yeah,
That's why we're seeing the dollar bid on, and that's why stocks aren't dipping too far. But also the market's been here before, and it maybe is getting a bit complacent that Iran can't retaliate. Well, it only takes something stupid, and then that thought is blown out the window. So it's a risk. We don't want it to happen. It probably won't happen, but I'm not going to risk my account betting against it.
Getting long up here for new contract highs.
Yeah.
Okay. All right. Why don't I move to Kay? Kay, good morning to you.
Aloha.
And are you in Hawaii? You have a view on WTI? I mean, it really didn't do much since really the Israeli attack here.
Yeah. Are we not seeing exactly the same as we are seeing all the time, trying to rally and then having difficulties to hold the rally? It's probably part of this whole market. We're seeing it in gold. You've just been talking about the reaction in or the non-reaction in yen. Look at the Swiss. It's not. It is behaving a lot better than the rest, but it is not really ramping higher either. It looks like the whole market was maybe not expecting the US to hit so quickly, but at least expecting them to hit. But no, it's really the way this market reacts or has a lack of reaction to events that are happening now. The thing is, and I've been saying it so often, there is so much more money in the system than there was years ago, right? Only have to go back to the global financial crisis. We are talking about a few $1 trillion now. I mean, the only the FX market is worth more than $7 trillion per day. And then after COVID or due to COVID, there's been a heap of money being added to the system as well. Is that the reason? I think so. I think so. If you are and those who really manage the real money, you know, the real hundreds of billions and trillions of dollars, they are not going to change their positions every day. So it's more like the ones that Blake was mentioning, hedge funds and short-term models and algos who are trading up and down, and the big boys they are waiting in the wings, and they will only change their plan or their big books in very incremental ways and lazy or spread over a lot of time. So I think that's why we have a difficult reading of the markets really on events right now, and I guess that's why we see those kind of moves. If you look at what's happening in gold and silver actually not so much in my opinion, but gold, we're seeing the same thing. The gold has been bought for the past 2 years, right? And now that we have like those real risk events going, we have a lot less well, we have a sharp move and then it settles down. I also think it means that the market is now in enough hedges against everything that is bad, for it not to create the next massive move, if you want. We are still moving 50-60 bucks in gold per day, but we are not moving up to 3,500, hold it, and then do the next leg up to 3,600 to hold it again. No, now we are more in a sideways market, because I think a lot of those hedges are in place, and people are rather reducing positions a little instead of wanting to increase them on top of what they already have. And I still think that those trades, like gold, for instance, isn't done. I think we are still going higher, but there need to be a bit of book managing, and that's what we are seeing now. And then to come back to the yen, yeah, I think it's kind of what we're seeing as well. The short-term market or medium-term market is long yen. It's undeniable, right? And then you have this rebalancing going on, of investment money going into the euro partially. So maybe the Japanese are just buying euro yen as well, just as a part of this reallocation of funds, you know. I think that's like the global picture which is going on right now. And then you have the interim blips or shocks or mini outside moves on when a risk event is really hitting. But a lot of the hedges also were already or are already in place.
Okay, have you done anything in the last 24
I'm
hours?
I'm still, but I'm trying to stay out of the noise, but I'm still in longs euro dollar, and I'm adding on dips. I'm letting it go on rallies, and I'm just continue to play that because I think the reallocation is perhaps not done yet. Although when it comes in the news, it's usually almost done. But also this Friday fixing, we saw a lot of on the London Friday fixing. We saw a lot of euro demand again on the cross side. That may tell us that it's not done yet, and that's I'm only a half believer in the rally in the dollar on the back of this Iran stuff. I know traditionally the dollar is or should be very big, but I'm not convinced that the dollar is going to hold selectively against and I'm not standing in front of this dollar yen just to make sure, but I'm actually thinking that the rebalancing in euro may not be completely done. But I've got pain levels as well as everybody, or protection levels. Let's put it that way. It's not going to be pain anymore. But I think just in the low 114s, euro should show show the bids. If not, it's probably then it's probably going to correct lower down
And,
to.
and do you mind if I jump in here, Dale? Do you mind if
No.
I? Okay, I'm gonna show you guys a couple of charts, and K-Man, I 100% agree with you, and thanks for your explanation on yen. Like you look at the Aussie. I mean, the Aussie has failed, and this is one of the things that we've been talking about all week. Last week, obviously, we didn't know what was going to happen this weekend, but we've been talking about the consistent failure at the 618. We spent 2 weeks in the Aussie dollar not able to break higher. Same with the Kiwi at the 618 retracement. This is the 80 60 82 level. We've had it written down here. Oh no, I'm not even exaggerating. We've had on our bias chart 6082 with an asterisk, which asterisk denotes it's a really key level. We've had it highlighted there for weeks. And then obviously now, what has happened is happening. And now you're seeing it, everybody let go. So what K-Man's saying, and I 100% agree, is you have to be really selective in the dollar. And like I said on the week ahead video, again, this is before it all went down. As and he just reiterated kind of what I was even saying on the week ahead video. This 114 level is going to be really critical for the euro. And it's kind of where the rubber meets the road, right, K-Man? Pretty much.
Yeah, I think it's around 114, 114 and a quarter. I'd love to see a test actually, and to see whether I'm right or we're right to watch that level. I've got pretty quite a bit of confluence there around 114, 1525. Given you have to let the market, let the algos do their stuff as well. So take it down to 114, the figure or so, and there it should, in my opinion, really hold. But I actually would love to see a test of it.
Yeah, me too. And I think a break below that 114 level would, like I said this on the week ahead video. I'm just repeating myself. We would allow for a test, towards 113, 112.85, 112.50. Then it would open up down here. And I'm a happy buyer there at 114. I'm also a happy buyer down here. I just, obviously I'm not going to stick around for all of that. I don't want to do that. But thanks, K-Man, for your comments. And Ryan, I just want to go back to our topic of conversation here. This is the COT data, just so everybody sees. Going back to 2007, that's when we started really taking in the information. This is fast money hedge fund, most buying ever since the history of COT data.
Wow.
And that means that all the hedge funds had been looking for yen to strengthen, and obviously it's after what has happened over the weekend. I mean, it's just a squeeze. I think it's just a position squeeze. But again, we don't have evidence of that. And we will find out this Friday, because this COT data is probably going to dramatically change. And my assumption is you're going to see this green line dipped probably down where my cursor's at quite aggressively, because it's going to take in Tuesday's data, tomorrow's data, and we're going to see it on Friday. So that's my assumption. Ryan, did you have anything that you wanted to add to that?
Yeah, you've got to remember that for everyone because it's a futures market, for everyone that's long, there's a short. So there's always someone on the other side of the trade. But
Sure, but they've
longs
been.
have had it right all year.
Well, yeah, but that's why corporates and corporations usually tend to be the big whales, right?
yeah,
And they're taking the other side of it, and they typically like the winners. It's just this. There's three. I want to say there's whales or corporate, right? Then there's hedge funds. Then there's retail. Retail is usually wrong. And then, the hedge fund managers are usually second wrong. And then, the corporates or, institutions, or you can call them, central banks, they hold it all, you know what I mean? And they're usually not wrong.
yeah, and there's also hedging. If you were the right side of this trade all year, you're not going to sit and just go, "Oh, I'm going to let it run." You're going to be,
Right.
buying calls and whatever, or
Sure.
hedging the other side. So, yeah, it's never as clear. Always the short terms are the one that gets spanked. That's where you see the short coverings and like that, because it's always the people who are late to the move, late to the trend, and they're the ones that get caught out the most.
And just so you guys can see, this is the dollar yen breaking higher. This is the yen weakness. This is what we're discussing. All right, couple other things. Really quick, guys. Just gold has obviously come off. You've seen gold. This is maybe another positioning situation. It's like everybody that owns gold was, I don't want to say was waiting for something like this, because that's not correct. But you own gold as a protection of what had just transpired over the weekend. And you can see there's been very little movement there, probably very similar to what you're seeing in the yen. So that, I think, has been pretty interesting. And as Dale, you pointed out, crude oil, I mean, look at crude. We came and we tagged that trend line again, at the open, and it's come off since then. So this just shows you how important this $78-$80 level is moving forward, wouldn't you say? I mean, what's gonna get crude oil above 80 at this point, or above 70?
Some interruption in
The Strait of
the
Hormuz.
Strait. Anas doesn't think it's going to happen because the Strait of Hormuz also includes the Sea of Oman. So there's half the waterway is Iran's and half is Oman's, and that would be a violation if they went into Oman. That would draw more people in. So he doesn't think that's going to happen for that reason.
Okay. All right. So so that's Dale's take, and I agree with Dale here too. The Strait of Hormuz is obviously what if we're going to be rallying above 80 or 78, that's going to be, $79. That's going to be the catalyst.
Yeah.
Okay. And I know we're running out of time. We have Adam Button. He's going to be here from Forex Live. Most of you guys know who he is. But before we bring in Adam, let me ask Ryan, what are you going to be doing today? What are you looking at? What are you trading? I mean, I know what I'm going to be doing. Do you know what you're going to be doing?
In a word, no. I'm just going to be watching for a bit, I think. As I say, apart from my dollar mix shorts, I'm flat. And
so you're still short dollar mex from a while ago, but don't you think that because we have this double bottom here, we completed the double bottom. Forget it. Never mind. No, well, now that we completed it, maybe it has a chance to go down again.
It could well go down. I think that 19 level is going to be super important on the retest, because if we wash out all this geopolitical stuff and we get back on the bearish train, but if we hit that 19 and it holds, I think we have a case for perhaps a longer term bottom in play.
Okay. All right. Very, very good. And but since the beginning of the year, actually since Trump was elected, we've been sitting here on the Face show saying, I know I've been saying, hey, dollar mex is going to eventually trade to 18, since way back in November. And we did trade to an 18 handle. We were 1880s,
Yeah,
and now that we've done it,
nice
it's
call.
like, oh, thank you. But now that we've done it, it's like, okay, now you have to be a little bit more careful. Obviously, this geopolitical risk could, I would be so happy to sell the dollar mex back at 1980 if we saw it again. I mean, if that's a big if. But let's hope we get it. Okay, man, anything that you're going to be doing here over the next 24 hours that you feel?
No, not really. Waiting for what's to hit next. But as I said earlier, I'm more than happy to continue my plan in the euro right now, and the rest as it comes. Really, I may if I see silver back at 35 bucks, I may add again what I let go of my long terms and just small and incremental ads again. I'm staying away from gold because I think there may be a little more redistributing the hedges coming. I would really not be surprised that we break under 33, 40, 45 and have a look in maybe even on a 32 handle before the whole thing is over.
One of my three trades for the week ahead video was to buy silver on a dip to 35.20 if we see it. So I've got all sorts of alarms set up
Big,
down
big
there.
break level,
Yeah,
big
it's
break
bit,
level there.
and it coincides with a 38% retracement too, which is, indicative of a bullish trend if it holds. So great, great eye. I'm glad we're looking at the same thing. Ryan, K-Man, you guys knock it out of the park every day on the Flow Show. If you guys are not listening during European hours, it's how I get caught up for the day. Or at the morning. Soon as I get up in the morning, first thing that goes on is the recording of the Flow Show. So thank you guys for doing that. Dale, it's great to get your geopolitical views here, because you know this stuff better than most. So thank you for your input on everything in the Middle East. Even people that are listening in are like, thank God we got to hear Dale's views. So I'm happy to have you bring on Adam Button. He's a great guy to have here on a day like today. So Dale, I'm going to pass it over to you. And good luck, everybody.
Okay. Thank you very much, team. Thank you, K-Man. Thank you, Ryan. Thank you, Blake.
Thank you, coach.
Cheers,
I
Cheers,
mate.
Coach.
hope you guys have a good day, and I know you're going to do a good job for people this week, even though there's a lot of trepidation because you're pros. And let me bring in another pro, one that I always glean some insight from, my trading warrior brother, Adam Button. Adam, uh, feels like I haven't talked to you in a year.
Hello, Dale. Yeah, it's been a quiet year, hasn't it?
Yeah, well, I haven't talked to you in a while, so that keeps it quiet too. And I'm interested. Maybe I'll take over the screen.
Yeah.
So much has happened.
Yeah, I'm going to stop sharing. And good morning,
Uh,
Adam. I'm going to let you guys
Hi,
go,
Dale.
but just want to say hello.
all
Good
right,
day, Blake.
Good day to you,
so,
sir.
since you and I last talked, we had, you know, the crash into April, war developing. It would take us forever to catch up. So let's just go forward. Where's your head on the dollar? Dollar getting a bid today after the bombing, but it had already started to get a bid. A lot of dollar bears out there, Adam. Do
Well,
you think?
that's a good point. That's a good place to start because you
All
see
right,
some of the surveys, Bank of America's survey of fund managers, short dollar, super crowded trade.
yeah,
I think I saw that data from Goldman as well, saying the same thing. It's hard to believe, on the other hand, because long dollar has been a crowded trade for, I don't know, 7 or 8 years,
yeah,
um, that it would have reversed that quickly. But now we're starting to see signs that they're onto something, at least in the short term, because the dollar, pretty big pop in dollar yen today,
yeah, huge.
and Dixie in general, which is showing there. I mean,
So bear
you,
market rally,
well, I think
or
you can still. There's not a lot standing in the way of, that Dixie chart can go up a lot more. Dollar yen a fair bit. I mean, the euro has been getting a lot of those flows, right?
Yeah.
And the idea is that Europeans are selling US assets. And if you look out just outside of FX, dollar denominated assets are sort of supposedly being sold, right? Or rebalanced at least.
Yeah.
And I think ultimately the performance, I mean, you have to chase the performance. And the US is tech, the US is AI. Unless that really washes out, it's kind of tough to be bearish on the US. By the same token, we're talking about everything that's going on. We're watching this budget bill unfold. Now you're going to pass. Obviously, it's going to pass. It's close to what it is or whatever. But then you look out, there'll be another election, 3 or 4 years. I mean, eventually this has to start to reverse the fiscal expansion. You're going to get a divided Congress at some point. And I don't know when you price that in. And meanwhile, Europe's sort of expanding. So,
I mean, the rates market, the yields market is probably one of the more confusing pictures. You can make a case that, maybe we're bottoming, the 10-year, if we get some kind of breakdown under this 430 level, could start heading down, kind of looks like a descending triangle. So, are you in the camp that tariffs could actually be deflationary? Everyone's
I
talking
think,
about the
well, I think
inflation
that, listen,
from
the
it.
Fed's going to be late, right? So it's looking, we are
Aren't
seeing
they
some,
already? Aren't they
well,
already?
when and how late will they be then? So if you've got
Okay.
rates too high in a slowing economy, that's pretty deflationary. And
Yeah.
tariffs could be reversed too. And then you get sort of deflationary impact that way. Oil price up a bit here. So that's going to keep the Fed on the sidelines a bit longer if we can hold around 75 or whatever. So you're going to get some higher monthly prints.
Okay.
But you talk about rates, like so many cross currents, right? So if you're trading right now, you're trading the Middle East. And
Okay. Yeah.
last week, you're trying to trade on the Fed a little bit at the same time. And you have the trade war. The G7 was just last Monday, feels like a month ago. And there's no progress there. So you're trying to trade the war, the trade war, the budget, the economy, whatever else Trump might get up to. And it makes for, you have to either trade 10-minute trades or try to trade
Right.
for 10 months, it feels like nobody, and we've probably
Swing
been over this
trading's
before.
tough.
And I
Swinging
know a
is
lot
tough.
of traders, Dale, and I'm sure you do too, a lot of really successful traders. And nobody is trying to guess what Trump is doing anymore. Like nobody has been able to do it. Everybody's basically lost money trying to guess on his whims. And it just, even if it's worked out, it's a very difficult trade.
Okay.
And
Well,
just that.
I did hear regarding euro that, euro kept appreciating against the dollar, but the last 3 or 4 weeks, the interest rate differential, I don't know, is it SOFR, was starting to move in favor of the dollar. That the interest rate differential was moving from out of favor to the dollar to in favor of the dollar over euro.
I mean,
Is that what you saw? Anything in these interest?
listen, go back to the ECB. They kind of signaled they're going to be on the sidelines, and you would have thought that would have helped the euro out, right? It was pretty hawkish from Lagarde, or less dovish, and it didn't really, right? And
Yeah.
then the trade war's gone sideways again. You think that would maybe help the euro? It hasn't. So a lot of those things that yeah. So for I haven't seen that, but when you can't rally on good news anymore, you wonder if that's looking like a little bit of a blow off there
Yeah.
in mid-June.
Well, I mean, if it's a descending triangle, it's about 150, take it to about 13. I actually am more aggressive, think we could get to 110, but I think part of that would be, we're all looking at the Middle East right now, Adam, and there's still a lot of noise and danger happening in Ukraine.
And,
So, this kind of takes our eye off the ball in Ukraine. And I think that Europe is more concerned and vulnerable to what happens in that conflict than the Middle East. We already know they're vulnerable to energy shocks. The whole world is, but
Well,
geopolitically, that could be a problem, or maybe some flight capital away from the euro if things, you know, escalate.
well,
And
okay,
they
I'll
have
ask you
been
this.
escalating.
What day, Operation Barbarossa, right? The Nazi invasion of Russia, right, the biggest military
Oh,
conflict in history. What day
right.
did that start? It was June 22nd, 1941. Right.
Wow.
So today is June 23rd. So there's a day ago. So European offensives happen at this time of year, right? It was a little bit delayed, but now is the time that things can really kick off in a war. I mean, you see these periodic
That's a great
offensives.
point. Yeah, the
And
summer months, the ground is hard. You're not dealing with the snow like they do in Russia and in Europe. So
and
do
there's
you
been a few
see
surprises in that conflict, right?
recently?
Ukraine had their counteroffensive.
Yeah.
Now might be
So
the time.
what are you thinking about Russia here?
Well, I'm not a fan of a lot of the things that are going on in the world, but it's really hard to drill down and focus on that. I find. I think you're just making a case that there's all these risks, and I'm trying to think about, okay, what are we going to be trading on 6 months from now? And I'd say like the bottom of the pecking order right now is the economy, right? You have all these wars, trade wars, everything else. I think eventually we're going to be trading on rate cuts. And so is this all noise? And I'm coming around to the view that, well, the tariffs are, maybe they are noise. You just price in 10%. Um, the Iran war looks like maybe it is going to be noise. The US doesn't want a ground war. So what's the big risk
No.
there? Um, and then
Well, the
Russia,
risk
Ukraine. I
is,
know I do see Lindsey Graham making a lot of noise about sanctions.
yeah. And
Like
President Trump said sanctions cost a lot to enforce.
well, he said there's something like 80 cent. Well, I guess you could have sanctions and not enforce them. Because he said that he had something like 84 senators lined up for it. So that's obviously veto proof.
Okay.
But that, I think, would maybe be a spot to watch. But the whole geopolitical trade, it's tough right now. Like, and nobody predicted anything that's happened this year on that front.
I did.
All right. I listen. It's
Okay.
been tough, but you're
Well,
right. I mean, listen, I'm
maybe
not
I'm
gonna say
no
that
one.
nobody did,
Maybe
but
I'm no one, but I did. Anyway, so what do you think the trade is? Here we are at the beginning of summer, new season. We just passed the summer solstice. What do you think between now and the fall traders should be focused on? Because I know you mean, Adam, there's just I feel desensitized. There's so much out there to go through that's having impact, and I don't think any time in my career we've had this kind of geo stuff happening at the same time with trade wars. Just the word war, it's like it's being used all the time, more than any time in my life. What's the opportunity between now and Labor Day?
yeah. Well, I mean, if you kind of stretch it out a week at a time here, this week pretty dead, right? PCE, US, not a big indicator, I don't think right now. Just because we're waiting for some trade war indicators, trade war effects. And you get it's July 4th week after that. And then you're into sort of these Liberation Day, July 9th deadline, which I think everyone expects to be punted at this time. So then you have, are we going to get a trade deal on anything? And that is where you're at. And then, if you're going to punt from July 9th, you probably take it to September on the timeline on that. And then that does get you to Labor Day. And you kind of are looking at some of the rhetoric around that. Okay, people are making deals. We're going to make deals. There's talking about India, Pakistan last week. I think Trump sounds like that's going to be a deal. But
Yeah.
I don't know if that tells you anything, because India has such high tariffs. They bring them down. I mean, the EU can't really offer that same sort of thing, or Canada or Mexico or anyone who's a big trade partner with the US.
Do you like
So
foreign markets over U.S.?
I still like the US. There's some decent momentum going on here.
Yeah, I wanted to ask you about this, Adam, because this was really phenomenal action, both sides. The crash to the old breakout at 4,800, and then this recovery, mind-boggling. So, I heard that, the talk is retailers bought this dip,
Well,
and
they
the
were,
institutions are under weight
and
the
they'll have to
market.
chase if it breaks, right? I think you can buy a
Right.
break. You probably need some good news to get a break to the upside. I don't think I want to buy here. Um, and you kind of, it would be nice to get another sell off, but this buy the dipped instinct is intense.
Yeah, it was
You
intense
you worry
today.
about some of the names that are leading it. I'm sure you watch Circle or whatever up, I don't know, bazillion percent since the IPO 2 weeks ago.
Yeah, I don't even know what
This
it
sort of
is.
penny stock mania sort of stuff.
We're
Big red
getting meme
flag there.
stuff again, huh?
I mean,
Yeah.
China's interesting, right? China's pretty interesting. The growth is good. They seem to be weathering the trade war okay. Still super cheap. They're winning in a lot of ways. I think I read the interesting book on Apple and China, and you just can't get away from China. Like there's no moving things out of China. And I think that America's maybe trying to reconcile itself with that idea right now. They're just better at manufacturing things. And now the whole supply chain's there. I think maybe at some point once that sets in and your timeline can be differ on that you have to try to make friends again. And if the US goes from really trying to take back manufacturing to trying to coexist a little more with China, there's a huge re-rate opportunity there. And I don't think it's going to be friends, but
Yeah.
if things stop getting worse,
Okay,
big
so you think
opportunity there.
you think China's a shot? I mean, we're getting pretty close in Baba to where if this is going to be good, that we're compressing now. So, Baba might be maybe played against this moving average, could be a decent play. Um, it's strange to me about Baba though, Adam, is when I see charts that look like this, like dots, you know, it tells me there's not a lot of liquidity
Yeah.
in the market. Like, what do you have to do? You have to make an appointment to trade this stuff, and these are big
Huge stock.
companies. Yeah, so there's the picture. Big
There's some big
triangle.
problems in market structure in a lot of places right now.
Yeah, I mean, where's the liquidity is drying up in places,
Well,
it
and as
seems
soon
like.
as things go wrong, liquidity is just gone. I mean, it was gone in
Yeah.
April. It was gone in COVID, in bonds and everything. And there's just going to be some kind of blow up. I don't really see
Every,
anything on the horizon, but whatever it is.
well, everyone's thinking it's going to happen in the bond market. Do you agree? I mean, everyone's saying that the bond market's going to break, that the U.S. is going to have a Liz Truss moment in their treasury market. Do you see that, or should
I
we be
think, if
contrarian?
you get, you're pricing in still a pretty best case scenario right now. If you got a recession, a war, the Iraq war cost what, $8 trillion?
Yeah.
Um, anything along those, like a fresh shock, even an inflation shock. Oil going to 120, right? I mean, what are you paying for a 10-year then? You got to price in the possibility of Fed hikes if you get that.
Yeah. Yeah. I mean, I don't think it's done. I mean, I think we could have a pullback, but um, Mark Chandler once told me during an interview that every major recession in the U.S., almost every, he didn't say everyone, was preceded by an oil shock. So could this be the nail if there's an interruption of the flow of oil from Iran? Could this be the nail that finally, a lot of people are saying we're already in a recession and the Fed is late. What about an oil shock and higher gas prices on top of it?
Yeah, and then because then the Fed's hands are obviously tied, right? You could say, oh, it's a one-off from tariffs, it's a one-off from oil. Like they're not going to look through that, and then you have the Fed sitting it out for a long time. And it could be U.S. blockade on Iranian oil. It could be Strait of Hormuz, like everyone's talking about. Could be something else in Russia, like you flagged.
Yeah.
So
Yeah, that's what I mean. There's so many pots bubbling on the stove that you know, you're paying attention to one and then one bubbles over the other
and
one.
I'm not like right now. I just don't see these big opportunities, whether it's oil, whether it's any of this right now. Someone's asking dollar CAD. Not sure. I think a lot of the oil market, if you look further out the curve, dollar CAD will trade a bit more on that. It's looking
Yeah.
like short-term disruption. So it's come up a fair bit.
Yeah, nice 1 week move. I was thinking maybe 140 and then back down, 139, 140 and back down again.
Yeah, I could see a lot. This is where it's like a retracement moment right now, right? We're seeing a lot of that. We're probably still waiting for it to happen in stocks, but gold's in a bit of a retracement now.
Yeah, everything
Oil's
but stocks.
everything kind of coming back in. It's kind of a summer trade, right? 2 quiet weeks here. Wait till July 9th. Trump is his instincts around tariffs are so aggressive.
Yeah.
Again, I don't want to predict what he's going to do, but it's not going well right now in these trade deals. And I think that is going to have a bigger effect. But the lesson of the first Trump admin was ignore the tariff noise. And these are higher tariff levels though, so can you still ignore it?
Yeah.
Um,
It's going to be a interesting finish the last 6 months of this year. So, you know what? I think it all kind of boils down because I've talked to you, I don't know, maybe 50 times at least, Adam, over the years.
it's been a good
And you
run.
know, and you usually have conviction about something. And when a pro like you doesn't have conviction about anything and says you either have to trade for 10 minutes or 10 months, that's a statement in itself. So I think a lot of us are, in the I don't know camp. And, you may see short-term stuff to take advantage of, but it's pretty hard to say I'm going to take a position here and I'm going to hold it for, 3 weeks.
Well, and here's the secret too, an analyst is sort of out of business if you do that, too often. And like you said, we
Yeah.
talked 50 times and I probably haven't done this once before,
Yeah,
but
you haven't.
it is and because it's bad for business to be an analyst that says like be careful right now.
Yeah.
And even if you look at places that camp out, and I think this is always good advice. People, I'll buy puts, buy bonds. If you're bearish, just cash. Like there's something to be said for just raising cash. But seasonally, July pretty good. It's not like there's any rush. We don't need to run out and freak out over everything. But
Yeah.
I think you've nailed it or pinned it down there. It's a tough stance to take at any time, especially the way everything's so aggressive online now. So many bots online. I was
Oh
watching
God.
this Tesla launch. Everything's
Yeah.
bots, everything,
I
and
know.
you can't really trust anything except Dale Pinkert
No,
and
well,
real people. And so you
it,
got a good thing going here with real people because like 90% of everything online now, I must be going crazy because it just all seems fake to me.
yeah, well,
And
there are AI generated there might be AI generated Dale Pinkerts out there. I know some guys in the business that are getting messages from their friends congratulating them about stuff that they don't even know about. And they're
oh,
creating AI images of these people and putting the stuff out.
yeah, it's golden age of fraud. I mean, AI, if we look, okay, black all this out, the whole Trump admin, in 4 years from now, and there's a new president or whatever, we're going to be talking about AI and all the changes in the world from that. I'm not a big tech trader guy, but what a heck of a trade it's been for the
Yeah.
techno optimists and just enormous. But it is, I mean, the early adopters of almost every technology in the last 10 years have been fraudsters.
Yep.
And
And any view on crypto? May as well go there.
it was kind of interesting. It came back nice today. I mean, it's a really good barometer of risk appetite. It really
Right.
is. It seems to be ahead of the curve on the risk trade. Like I don't have a strong view on Bitcoin itself, but repeated opportunities in that sort of short-term trade we're talking about
Yeah.
are on the signals from Bitcoin, either intraday or a little bit longer. It hasn't gotten to new highs, so I can't be bullish on stocks until it does. And I think
Okay.
if you I think you can trade off it in that sense. That's looking pretty tired, that Ripple chart you've got up there.
Yeah, I'm looking to buy it if we get some type of flush down here about 140. I don't know if it'll get down there. Kind of reminds me of the crude line I had that I waited for a year or so for it to hit, and then I bought it on the line, and then it didn't overthrow from 62 to 56. So uh, anyway, Adam, say you were talking about how it's not good for an analyst to not be throwing out a lot of ideas and to tell people to take care and maybe even shorten their time frames. But you know who it's good for? Your
Who's
customers.
Well, I hope so. You try to
Yeah,
build
yeah,
trust,
yeah.
and
It's good for people because they never think about that. It's okay to do nothing at certain times in market history, and I
well, that's
think a
my
lot. Go ahead.
it's
Go
my
ahead,
favorite.
buddy.
It's my saying, and it's helped me probably more than any saying, is that there's always another trade. I think
That's right.
The FOMO can eat you up. Looking at the
Yeah,
chart, like seeing Circle or whatever up 600% in 2 weeks.
yeah,
It's that kind of stirs the greed. But there's always going to be another Circle. There's always going to be another, and you don't have to hit 100 of these trades in a career. It's like five or
no,
six. You make it
it only
two,
takes
really.
one,
Yeah.
and I just want to show uh, where people could follow you. So here's Adam's. I know most of you know his handle at FX underscore button, but um, and you can find his excellent stuff here. I'll eat a cookie. It's breakfast time. So anyway, a lot of great coverage. Adam's one of the best news traders in the financial uh, space. Works with Greg. They have a great thing. Anything new that you want to talk about that you're doing here
Yeah,
on
well, we're going to
Forex Live?
rebrand. We're going to rebrand the site to investinglive.com. So
Okay.
that's going to become later in the summer. So pretty excited there. But everything will redirect. Same quality of service, pretty much same thing. Just trying to grow it a little bit in that sense. So that'll
So
be interesting.
you'll be doing more stock coverage and stuff. Is that
Well,
why you're
yeah,
doing
we're
it?
gonna have some people. I'm gonna try to do most of the same things. I mean, cover commodities, macro. You can only spread yourself so thin.
Yeah,
But yeah, we'll have a little bit more of that. And again, we're just looking for headlines to trade on
yeah,
a lot of the time. And you catch a headline here and there, and it can be on a lot of different things if you cast a wide net. Could be an M&A deal, could be geopolitical. I remember if you go back to Israel, Iran, I don't know, 2 years ago, a year ago,
yeah,
there was a pretty good fade. I remember there. I don't know. There's always a headline, right, Dale, that you can trade. So we try to be right on top of the headlines more than
yeah.
anyone. And it's free, and it's live, and it's fast, and it's yeah.
And it's got Adam,
We try to.
which I think is uh, you are Forex Live to me.
Well, thanks.
Uh, anyway, Adam, really good to talk to you, buddy. How's Canadian real estate doing?
It's struggling, Dale, and I've been pretty bearish on that for a while here,
Yeah,
and it's just
yeah,
struggling and struggling and struggling, and it hasn't hit consumer spending as much as I thought. I still think that's coming, but
okay.
it's the power of the consumer, which I
And
maybe credit a little bit to advertising and Mark Zuckerberg and everything else, but people keep spending money they don't have.
yeah,
Uh,
the definitely consumer debt is off the charts here in the U.S. So how do you like having Mark Carney as your prime minister?
he's had a decent start so far. I think we needed some change in Canada. Everyone thought the election was going to go a different way a few months before it started.
Right.
He's come in. I think every politician in the world has the same job right now, and it's dealing with Trump. Maybe
Yeah.
he has the
Even
magic.
Trump.
So,
uh,
there
yeah.
haven't been Abe had a lot of success in Japan. He's dead. So I don't
Yeah.
know who you look to now, who's a real Trump whisperer in a foreign government.
Yeah.
Netanyahu, I guess, but
Yeah.
there's not really a trade on that. So we'll see how that develops. But so far, he's saying all the right things. But politicians. At least, you know what, could do worse. You could do worse than Mark Carney. And you certainly
Okay.
are doing a lot worse in many parts of the world. So
Yeah.
we'll
So
roll with the
anyway,
punches.
I always root for you, Adam,
Oh,
and
well, thanks, man.
and I know that you put your heart into what you do, and you're trying to do the best. And you're the second or third veteran trader that I've heard talk about that this is not the easiest environment for
Oh,
especially newcomers. So thanks for sharing your experience with us, and we'll talk, later in the
all right.
summer or fall or even
Enjoy
before
that
that.
San Diego sunshine.
I'm moving to the beach for the summer.
Beautiful, beautiful.
Yeah, so I've got out of the desert and can't take it. So uh, I'll take heat in the market, but I can't take it on my body.
We got a heat
So
wave here right now. I mean, by our standards, it's intense.
yeah. So Adam Button, everyone, follow Adam at FX_Button and check out his and Greg's great work at Forex Live. Thank you, buddy.
Wonderful, Dale. Wonderful. Have a great week. Nice to talk to you on a Monday.
All right. You too, Adam. So everyone, that's going to be a wrap. Everyone have a good day. Take heed on what these pros are saying to you. There's no law that you have to trade, right? It's not against the law to be flat for a while. And remember, don't just count your pips, count your blessings. And see everyone for Turnaround Tuesday tomorrow. Adios.